Brenda, tell us a little about yourself, how long you've been in the capital raising business. Leapfrog, is it?
Leapfrog Fund. Yeah.
Yeah,
Yeah.
give us an easy intro
Okay.
into, what fundraising capital is all about.
Of course. So I still do have a W-2. I work for Apple. I'm a recruiter. I hire electrical engineers for the displays team. So I've been recruiting for 19 years, been at Apple 7 years in May, and I joined Sub2 almost 2 years ago. And the main reason I joined Sub2 is because, I was looking for a way to offset taxes. I live in SoCal. I make a lot of money on paper, but all
Hmm.
the money goes to the government, right? So, just through internet, Google, right? I came across a few real estate people online, and Pace was the most magnetic. I was like, hey, I could do that. Like, I'm smart enough, or and I'm a hard worker. I could do that. And, like I was saying earlier, I started off thinking I was just going to do Airbnbs because that seemed the most attainable. Everyone was doing it. I didn't have a team. I didn't have friends who were real estate investors. And then as I got more involved with the community and, as you guys will soon see, like you just gain so many friends through Sub2. Like it's pretty freaking cool. Um, I helped create OCJV, which is, community here in Orange County, real estate investing. We meet once a month. And I was able to find business partners. And, all of last year, pretty much, we were looking to buy multifamily. But, nothing was penciling out because bank debt is really expensive right now. So we found JV partners who had been focusing on RV parks. And because you can buy RV parks creative, returns made more sense because we have a fund, so Leapfrog Funds, and our fund is a 506c. So we raise money from accredited investors only, which gives us the opportunity to, advertise online. We can do social media. So if you follow me like on Instagram, Brenda Rose Invest, that's pretty much all what my content is talking about raising capital, investing, building generational wealth, trying to get out of the W-2 hamster wheel. My biggest thing is like, I want to retire within the next 10 years. Like I'm turning 44 next week and I don't want to be 65 still grinding at a W-2. Like if you think about it, most people die 77. So it's like I have 10 years to like live my life. That sounds awful, right? That sounds completely awful. And, the entrepreneur mindset of like, breaking through that system of W and whatnot. It's like working for yourself and making money and investing your income into, income producing assets, right? Because like my ultimate goal is to, like I said, leave W-2, but continue my real estate investing business. And I want to travel the world. Like I want to take my son to 10 different countries before he's 10 years old because I never got to do that when I was young. I'm first gen Filipino and, we live paycheck to paycheck. And, every time the apartment raised the rent, we had to move. So it's like my goal in life was, get good grades, go to college, get a good job, buy a house. And the failure in buying a house brought me to real estate investing. And now I'm going to be an RV park owner. And now we're going to buy 10 of them this year. So it took 2 years, but those 2 years went by really quickly. And I kept my head down and kept on working through all the frustration. Like if you talk to my business partners, like I was getting fed up of not getting a deal because everyone else was getting a deal around us, right? Like that's natural, human nature to feel like, but if you believe in yourself and you believe in your team and you believe in your goals, like it will happen. So super excited. That was not a short intro. My bad.
That's
You
great.
just press play and
You went from like getting no deals to just get it to like buy an RV park. It's kind of
Right.
funny.
Yeah. Well, and again, it's like,
You don't mess around.
yeah, our team
wait a
underwrote.
second.
Yeah.
You created a fund.
We created a fund. Yes. So
And when did you create the fund?
I met my business partners at one of our meetups. It was actually a meetup where Kevin Cho was speaking. And I was the only one in the group talking about multifamily because again, mostly Sub2 people are doing single family. And, we immediately like started talking to each other, and then we in touch, and we essentially like vetted each other out, and we brought our families together twice. Didn't even talk about business, just wanted to make sure that like we were on the same page with like morals and like just family values, because like if shit hits the fan, like how are we gonna like handle this, right? Because like getting into business with someone is like getting married. So we really found that like we had the same goals, the same values, and then we're like, okay, let's start a fund. So the fund was started like December 2023. So all of 2024, we were like focusing on multifamily. And I think our team underwrote almost 300 deals. And it was mostly, Sunbelt, landlord friendly states, because, we don't want to be dealing with tenant laws, right, here in California. But nothing was making sense because we knew we were going to be raising money, and investors are not going to invest with you if it's just going to be mediocre returns, right? Like if you're going to get 10%, like why would I take it? Market? Everybody wants 15, 20 or more, right? So like our target for multifamily was like 15% cash on cash and a 2x multiple. But like the pro forma returns that we're, hoping to, planning to hit for our RV park is 17.5 cash on cash, 29.9% IRR, and a 2.85 multiple. So simple math, in a 5-year term, our plan is to sell. If you put in 100K, you're getting back 285. So no.
Of all.
So 1 year on the fund?
1 year into the fund. Yes.
So I was going to make sure. So how much capital did you raise in the fund?
1.7 million.
Wow. So you're going to start the spending spree.
Well, so we're closing on Monday. We're going to wire the funds to, I think, title escrow Friday. So we are going to be official owners by Monday.
Well, how much of that 1.7 are you committing to this first bond?
Okay, so the purchase price was 2.2, and then 1.7 is what we raised. And so the deal is a hybrid sub-2 seller finance. The sub-2 is on the barndominium, which is on the property. It was the seller's primary home, so it's 5,000 square feet. So there's a 2.8%, interest rate on that, and then the rest is seller finance. And then, what was I going to say? I lost my train of thought. But go ahead. I was going to say something I forgot.
Don't let me derail you.
Yeah.
So interesting.
Okay, this is interesting. So, did you know anything about raising capital before you started Leapfrog?
No, I didn't. But through the mentorship, right? It's like I realized that my skill set that I've been doing my whole life, sales and is raising capital. It's developing relationships. It's not asking for money. You're showing people an opportunity. You're giving them an opportunity to make more money than the, stock market. But it really is all just building relationships. So like the majority of the people we raised money from were people we already knew and already had built trust with us, right? So, going forward, I'm going to have to do more relationship building if I want to be raising money from strangers. So like, I just hired a new social media person. We're going to start putting out new content. I think hopefully in a week, we're going to film on Friday. And I need to build a know, like, and trust brand and persona on, social media. So once we get our next 2 deals, like people will want to invest with us directly. So ideally, you don't want to be chasing, right? It's like you're developing relationships with people who trust you, and they want to get in on it, right? It's like there's a FOMO of like, gosh, like I want to make 2.85 in 5 years. Like where else am I going to get that, right? And then it's like it's backed by real estate, So that's always like one of the selling factors is that, especially we live in California, like real estate is not going anywhere. The price is not going down. Yeah, it fluctuates just like stocks, but companies can go out of business. Real estate's always going to be here, right? And especially if there's a shortage of real estate. And RV parks are really exciting because, COVID changed everything. People are more nomadic now, right? And it's too expensive to buy a house. So like people are living in RVs and
the whole channel on it.
Yeah,
There's
exactly.
Channel on it. There's like, it was funny because and I interrupt you, but we went to Mammoth last week. And I'm in Los Angeles, so it's like a 5-hour drive. But when you get to these really, really tiny, like almost some of our ghost towns now. They're all now building RV parks out there.
Mhm.
And it's just so interesting. So when I got home, of course, I don't know if Siri heard me or not,
Of course.
but our YouTube channel started spitting out info on RV parks.
Yep.
And there was one segment on RV etiquette.
Yeah. Yeah.
Like, like when
That-
when someone's putting up their area and you're just getting to the site and they're like putting everything together, you should not go up to them. That is just so uncomfortable. Like they all said it. Very interesting.
Yeah.
And it was just when I was starting sub two. So I was like, that's funny.
Well,
I mean,
that's
Paige
a
loves
great
RV
session to
parks.
come to, right?
Yeah.
So but all right. So I want to get some answers about capital because
Sure.
so you're a year in. You hit. How long did it take you to raise your goal?
Gosh, when our first, I think we had our first like investor Zoom in January. So maybe 2 months.
2 months
Yeah.
from zero. And how long did it take you to ramp up on the knowledge before from the moment you said, I think I'm going to do some capital raising to now I'm comfortable enough and know what I'm doing. I'm going to do it.
Yeah, I decided
What was
that I
that
wanted to
then?
be a capital raiser at community camp the first time. So not last year, the very first one. So that was, I think, July 2023.
Yes.
So it's been a year and a half, right? So
Okay. So
yeah.
it took you that long to get ramped up, but that's not a long time.
It's not a long time. In the big
That's pretty
scheme of things, it's not a
remarkable.
long time. Yeah, exactly. Well, and that's the thing is like you have to like I always trying to like remind myself and tell people too. It's like I was going to school, First became a recruiter. I wasn't the best at it, right? It took years, it's a skill that you need to hone in on. So I needed to learn, get education and practice. And practicing was just like talking about it over and over again and just telling people like what I plan on doing. And then when we finally had the chance to raise, like people already knew. So like I already had been building my social media channel for that past year. So people already knew that like I was raising capital, we have a fund. And everyone was just like, when are you getting a deal? I'm like, I don't know. We want one too, So
All right. So now I just want to step back a little bit just
sure.
so people listening to this can understand. I'll just fill in a little background. We have the SEC has Regulation D, right, which is what this falls under. And like I told you, I know enough about this stuff to maybe be dangerous,
Yep.
or at least ask some decent questions.
Of course.
So you went the route of 501c6.
506C, 506C.
The B is the one that allows a mix of investors where you can have non-accredited, correct?
Yes, you can have non-accredited, but you cannot advertise. And so, we wanted to be able to blast the whole world and let them know. Because again, like we have these very big goals and, I don't know that many people that can drop that type of cash, right? So I need to let the world know what we're doing. So 506C made sense for us, especially since we want to buy 10 parks this year.
I've spent too much of my life with chapter 3, chapter 6, chapter 7 for the organization type. So I'm always going to mix them up with my little bit of dyslexia.
Sure.
So the difference between the B and the C is the B, you have to stay with people you know.
Yes, you have to have a pre-existing relationship with them and you have to prove it. So it's like, even now we're doing 506C, I'm still documenting all my touches with my investors. And I have a Trello board that I just push through. I track the process. So there's like first touch, second touch, third touch. And then after that, is like all the other processes of like setting the PPM, getting accredited verification, there's soft commitments, they wire the money and then funding, but I fully track all of that because just in case they ask, I have proof.
Well, you need to be able to do that.
Yes.
So how much overhead is that doing all that documentation work?
Trello's free and, everything I do is over email. And then when we have calls, it's Zoom and it's recorded. So, we're trying to cover our bases in all aspects. So those investor calls are recorded.
Cool. So did you do a lot of advertising? I thought I heard you say that most of your investors were people you already knew.
Most of them, yeah. I mean, so advertising meaning talking about it on social media. So there was a few people that I had already been building this like list, right, for like the past year. So once we got something under contract, it's like, okay, start calling these people, start texting these people, start having a conversation. The first step was like inviting all these people to our investor Zoom, where we actually went over our pitch deck, broke everything down, and was letting everyone know like what the deal was about. And then after that was just, again, a lot of chasing. Even though they were people that we knew, most of them, we still had to chase them to like sign the paperwork. Here's the wire, send us your W-9, send us this, send us that. It's like, everyone's not just like, oh, so there was, but there was like, for example, someone from my OCJV, he wasn't accredited, but he introduced me to his father, right? Like that was really great because I obviously had already created a relationship with him and he trusts me, knows me. So he introduced me to his father. But there was one person that I met through Instagram. And again, they were just following me and liked my story and liked what I was doing. And, I had noted that in my Trello that like, okay, this person is interested. So let's reach out to them. And that's what I did. So it's sales, right? It's a pipeline, it's a funnel, and you just have to push them through the funnel.
So what have you learned about talking about accredited investors? What motivates them to invest in a fund rather than doing their own real estate deals?
So, I'm targeting people who are high income, high earning, that pay a lot of taxes, and they want to find some way to either offset taxes or diversify their portfolio, right? So, and the way I like attract people that way is because that was me, right? So like I find the commonality of like, hey, we're the same. I still work at Apple. I am high W-2. And like I started this journey thinking I was going to be a passive investor, which I am. I'm invested in 3 funds. I'm invested in Pace's fund. I'm invested in Venus fund. And then I also have invested in Rich Summers' fund, which he does boutique hotels, because boutique hotels is something I want to get into as well. So the only reason why I took it the next step of being an active investor is because I actually want to exit my W-2 eventually, right? But most people, like being an entrepreneur and like having that mindset is very daunting and overwhelming. Like I am trying every day to like influence my girlfriends who are all recruiters, who all work very hard. And it's like, we all have the same skills. Like if I can do it, I know you can do it. We do the same job, but like they don't have the desire at all, And I'm just waiting for the 5 years when we exit a bunch of properties and I get a big fat check. They're gonna be like, what the heck, Brenda? Like, why didn't you tell me? It's gonna be like, yo, I've been talking about this for 5 years. Like, I've been telling you, you don't want to listen to me. And that's how it always is, right? Like, no one's paying attention until the big thing happens. And I know 100% that's what's gonna happen. But
how did you do that? And then they're like, how did you do that?
Yeah, exactly. Why didn't you tell me? You're joking, right? Like, I've been telling everybody. It's on my social media, But yeah, so in credit investors, it's like, yeah, I'm attracting people who want to, like my messaging is like, you don't want to work until you're 65. In all honesty, let's think about it. You might work until you're 70, 75 because of taxes and inflation. Like you're going to be so old and then you're going to be decrepit with, hips and, on all this medication. And I say that because those are my in-laws. They can't even
talking about me.
Shut up. You're active and great and lovely. But my point, but you're not in a W-2. Are you? You're not in W-2.
No, I haven't ever. Well, maybe a dabble a year, a transition year or 2 here. I did work with a private equity firm for a couple of years. Just thought that would be
I'm not talking about
experience. But anyway, but you're talking about me because I'm old and I'm still.
I'm old too. I'm 44.
I can't imagine what.
I'm turning 44.
67. I'll be 68 this year.
I feel like anything above 30 is old, so whatever.
I'm 50.
The bar moves.
We're all the same. To me, we're all the same.
That bar moves with you. You said something about pitch deck.
Yes.
So, and of course, I invested with Pace's fund too. Mm-hmm. But all you have to do is say pay. So, okay, where do I send the money,
Exactly.
right?
But that's what I'm trying to grow into,
that's
right?
what you want to grow
An
into.
authority figure that people respect and like, she knows what she's talking about. I want to invest with her. Yeah.
So tell me, what are the key elements of a really good pitch deck or the pitch itself? What do you think are the most important elements of that?
Yeah. So our pitch deck goes over, first of all, it has like a disclaimer, always has a disclaimer. It goes over the team, right? Because we are all brand new to this. I mean, specifically me. My business partners are experienced multifamily operators, but we have never owned an RV park, right? So you got to like show some kind of credibility. And I lean a lot on them because at least they have multifamily in the portfolio. But like I'm the main capital raiser, they do the operations, they do, the underwriting, all the other stuff that I don't like to do, right? And the way our pitch deck is kind of laid out is like we're talking about high level what the deal's about. So like acreage, how many pads, there's the barnuminium, it has a 250,000 gallon spring fed pool, which is going to be like our main attraction amenity. And then you go like next slide is kind of like going deeper into the location, right? Because everything is location, right? So like why do people want to come to this park, right? So it's off of the main highway, I think I-20, 2 hours west of Dallas, hour and a half from Dallas Fort Worth. We're going to market it like a Palm Springs to Orange County, Palm Springs to LA. Like it's a staycation. It's hot in the summertime. Come hang out in our pool. Come, barbecue with us. Bring your family. We're gonna do like quinceañeras in the barnuminium or like a family reunion in the barnuminium. And then there's the right. So there's all the math details, the deal breakdown, purchase price, the sub two stuff, how, what the terms are and what our pro forma is. And again, I'm saying that high level because I'm not the math person. And then what else is on there? I know we have like a little section of like Q&A of like, you got to talk about risks. There's always risks, right? So like our park, it is technically in a flood zone, but like it's graded. So the pads are above the flood zone. So, because you have to, with a 506C, you have to disclose everything. Like you have to, you can't hide anything. You will go to jail. So disclose everything. And then what else? And then just like the returns, the time frame, the exit strategy. And I think that's about it. I don't know if I missed anything.
But what are your plans for sustaining those relations?
So
Like
we have,
that you were talking about, is that part of the keeping it family kind of
keeping the
jive?
relationships with investors or the people?
Investors, your investors.
Yeah. So, I mean, we have everyone in our CRM, right? So we do newsletters. So we've been doing newsletters weekly, right, up until the close. And then we'll probably do newsletters again monthly. We plan on inviting our investors to the park and, having kind of like a rebranding grand opening, kind of like what Pace did in, I think it was Tucson. I don't know if you went to that. Yeah. So something like that. And then, and at the same time, nurturing people on the email list that didn't invest with us and, tell them about the next opportunities that we have in the pipeline. And in addition to that, right, is like, I'm the main capital raiser. So like everything is through social media as well. So like my main platform, Instagram and Facebook, but I am also on, not Twitter, but TikTok, YouTube. And then my LinkedIn presence is the largest only because I'm a recruiter and I've been using that again for almost 19 years. So you just have to keep on letting people know what you're doing. Because the one thing I have learned about social media is that because of the algorithm, not everyone sees your content and what you're saying. And it baffles me that people still reach out to me and say, when did you switch from multifamily to RV parks? And in my mind, I've been barking it for the last 4 months, but not everyone sees it. So it's like,
well, that's hardly a minute in social media.
Right, exactly. But it's like, I feel like I'm telling everyone all the time, but they don't see it on their social media. So
maybe a couple people got a clue from this recording, but
yeah,
we shall see, right? Did you have to invest in legal fees, and were there other costs in launching the fund?
Oh yeah. So we hired an SEC attorney, and yeah, there's fees to set up the fund. You have to pay for the PPM, which is the private placement memorandum. It's like, I don't even know, 40 pages long. It's the whole like Bible of the whole deal and everyone and everything in it type of thing. We have to pay blue sky filings. So that's essentially like a tax for every investor in every state that you raise money from. So I know my team is dealing with that right now. Yeah, I mean, there's closing costs, right? TC costs,
It's a lot of costs.
a lot of costs.
Well, but just, forgetting closing costs, because that's part of the real estate acquisition.
Yeah.
But just the fund startup, if somebody said to you, I want to start a fund, how much cash do I need to budget to get through that process? And how
I
much?
mean, I think not originally, initially you probably need to pay $9,000 and then everything on top of that. So I don't know exactly how much we've paid, but it's like my business partner, he is a software engineer by trade, CEO, ex-CEO of a software company. So like he built out our website, but if you can't do that, you got to pay for that as well, right? So that probably costs a few grand. I don't know, but he spent countless days and nights doing it himself. Thank God, we're lucky.
That's awesome.
10 to 20. So we're looking at maybe 10 to 20,000. If somebody wants to start one, they best have that much in their pocket to get going.
Well, and that's the thing is that, there's a lot of people who approached us like, why did you start with a fund? Why didn't you just start with a syndication? And to be honest, like if you're brand new, it's probably better for you to start with a syndication. So a syndication is just the one property, right? But I have experienced partners because they're experienced business people, and like we are in a high net worth area, right? Like I'm 20 minutes from Newport Beach. Like we know we can raise money from a lot of people. So it's like we jumped to a fund because then it's just easier that way to like just raise money and have a bank account to buy assets.
So did consider syndication, potentially some of the crowdfunding, or also now there's that company Fractional. Were they even in the consideration while you were making these decisions?
Yeah, so I originally, before I started learning all the ins and outs, right, I was like, yeah, like let's do a crowd fund, like Pasted, because I feel like I could raise a lot of money from like sub 2 members. And I actually was able to with Ted Head, which is sub 2 or Pace's sub 2 fund main guy. And they're not going to do that again because their minimum investment for crowdfund was $1,000. And he says it costs like $900 to issue a K1. So they were netting negative for all the people who only invested $1,000 because they have to issue a K1. And a K1 is and I don't know how to describe it. You're going to describe it better than me. This financial document that details the depreciation.
It's like a 1099 for a partnership or a LLC.
Yeah, but it shows the depreciation paper losses, right, from the property. And I was like, oh, okay, well, that's a bummer.
Yeah, no, I heard that lament from him as well. Yeah. Okay, so I was just curious about that.
Yeah.
This is on processing.
Sure.
This is really interesting story.
Yeah. So another thing I've learned about like raising money, right? And Pace will say the same, or I don't know if Pace, but like Ted Head will say the same thing, is like the lower the amount of money, the more high maintenance that investor is, right? So it's like raising money from a credit investor. Like if someone can cut a 100K check, they're not going to be up my butt every 24 seconds asking what's the status of the deal, right? What we've found, again, because my business partner is an ex-CEO and runs in like C-suite circles, like founder circles, like we've actually been able to find people who want to invest millions, but the deal has to be bigger. And like family offices want to invest like a minimum of like a $5 million, right? And like our park is only 2.2. So now it's like, okay, for us to secure these larger checks, we need to start sourcing
You need a
larger
six-pack
properties.
of parks.
Well, just larger properties, right?
Mhm.
Yeah.
A six
So like
pack.
a property that's like 15 million. Because usually, we're raising about
Do
40 to
wait,
50% of the purchase price.
Do RV parks come in the $50 million flavor?
Oh yeah, there's one we're looking at right
Really?
now. It's got a water park. It's
Oh,
yeah.
wow.
It's very Dirty Dancing, if you remember that movie.
Oh, okay. All right.
It's like glamping, probably.
Yeah.
Glamping.
Yeah. It's got like tiny homes / cabins and stuff.
Like
And
Joshua Tree.
yeah,
Like
stuff.
what they do, a lot of them do on their land in Joshua Tree. They put like the trailers, and then they put like, tents and teepees and
And
all
cowboy
funny, quirky
pools,
things.
which are feeding troughs for livestock.
Yeah. I mean,
Yeah.
so that's why RV parks are so cool. Because honestly, like when I didn't know anything, I was like, oh yeah, apartment buildings. But all you do with an apartment building, upgrade the floors, the kitchen, and the whatever, and that's it, right? RV parks, there's so many opportunities to increase the NOI because you can add an ice machine, add a camp store. We're gonna do fishing and kayaking in the river for our RV park. Like,
That's so cute. Paddle boarding. You
yeah,
could do
there's so many
so
things
much.
you can do. Yeah. And then you actually get to stay there and have fun there, right? Like I can't
Yeah.
go just stay at one of the apartments in the apartment building,
Yeah, when I was little, I was like 8 years old, and I was at camp, and we went on a trip overnight. And now that I think about it, it was a Smoky Bear RV park.
There you go.
They had like a big pool, and they
Mhm.
had really nice showers facilities.
Yeah.
They had a
Like
little
we're thinking about adding pickleball because that's huge right now.
Oh yeah,
Some
trample.
people have talked about adding a golf course. So
Could
there's
be
just,
fun.
there's acres, right? Like 24 acres. We were looking at one in Virginia, which we passed on because, the numbers didn't make sense or whatnot, but that was like 7 acres. Like
Yeah, you could do
things
like
are on
weddings
so
on
much
there.
land. Yeah.
You can do weddings on there. You can have like a rescue on there. You could do anything. You can rent out some of the plots to farmers if it's like agricultural.
Yeah.
I mean, I don't know, but there's just
But
endless
it's
amounts of room.
exactly. I mean, it's so creative. You can do whatever you want.
Exactly.
I think it's cool.
So what kind of objections do you run into when you're doing fundraising for an investment like this?
Yeah. I mean, the first one that comes to mind is you guys don't have a track record, which is true, right? So, there was a few people who said that to me, and I was like, okay, well, I'll keep you in mind for the next one, and hopefully you'll be interested. Again, that's where the whole like know, like, and trust comes from, is like someone who's known me and knows that like I'm not a criminal and I'm a hard worker and, has seen like the work I've put into this business. Like, even though I don't have a track record, like they trust me, where that all comes from. Another objective was, a lot of people are like, ew, mobile home parks. And we're like, no, it's RV parks. It's transient, like it's a vacation place. And then it's like, some of these RVs are like $1 million. They're bigger than some of people's homes, So there's always this big misconception that it's a mobile home trailer park, trailer boys park. So I always need to correct that. And then one thing I did notice, like I thought before I started raising money that I work for Apple and like, I've been hiring engineers this whole time. I'm going to raise money from them. Well, they're so, stock focused and like liquidity focused that they couldn't fathom tying up their money for 5 years. And I'm like, really? For like an almost 3x multiple, you don't want to tie up your money? That's weird. And then like to them, investing 100K, they wanted to invest 25. And I was like, it was a total misconception to me that like I thought engineers, but I'm like, okay, fine. I don't want to raise from them anymore. Who I want to raise from are people who are like me, who are high level salespeople that understand, a commission risk kind of mentality, right? And so it's like high risk, high reward, So that's some few things I've learned just with like the avatar that I thought I was originally going to be raising from. And I also realized that engineers, because they're so smart and good with math, they want to overanalyze the deal and look at the underwriting, and nobody wants to do that. So.
Well, just a mile away from me, the big RV resort, it's called.
Yeah, the one in San Diego. It's got a pool. It's got a bar.
This place has got its own little golf course.
Yes.
And,
I saw that on
They're
Instagram.
so cool.
It's super cool.
a resort and
Yeah.
you have your RV instead of checking into the room. So that's the big difference. Okay, so what in the whole process, because you're just about to, when do you close?
Monday.
Monday. Okay.
Yep.
So what was the most surprising obstacle that you ran into along the way, and how did you overcome it?
With capital raising
Well, with the
or
whole
just
to
everything?
find the RV park, what was the
Um,
lesson learned, I guess, is what I'm asking.
yeah. So it's something that Pace always says, right? Like buyers are liars and sellers are worse, right? So, we already, I don't remember, I think maybe this was like a couple weeks ago, right? Like we finally got the 2024 financials and like found out that, the numbers were not exactly what the person had said. So it's like now going forward, we want to make sure we have those earlier on in the due diligence process, right? And then, like I said, with raising capital, it's like all these people said that they want to invest, but then it's like they were lagging, and it's like, why? We didn't think we needed to chase people, especially again, like we know them, and like we thought it was going to be easy. So like there was still this like chasing that we had to do. So I don't know if that's something that will continue to happen. What other things? Let's see. I mean, there's a lot of things that we're learning. It's just, I mean, we're doing this for the first time. We're trying to find a park manager, and that's becoming a little difficult. So my JV partners are going to actually go on site and help manage while we find a park manager. So, it's just a big.
You're going from acquisition to operation.
Yeah, right. Yeah.
That's a big transition.
Yeah.
That's going. I'm back and talk to me in 6 months and tell me what that part of the journey is like.
I mean, yeah, I'm planning. We're all planning on going to the park pretty soon. Obviously to like learn the ropes because we want to learn ourselves, right? Because we plan on buying a bunch more, so we want to set up like proper procedures, SOPs, sorry, and streamline it so the growth is quick and efficient.
By the way, on those financials, I've found through the years because because of the nature of the type of consulting work I've done through the years, that when they're late on the financials, it's not because they're trying to hide something, other than the fact that they haven't done
exactly
work, right.
100%. Yeah,
they're going into bags and desk drawers and stuff that hasn't been properly filed and trying to reconstruct it on. That's usually it's not an act of deception.
we're dealing with mom and pops,
Right.
so it's like they're not these big corporations that have, some people don't even have anything in a software, right? It's just a bunch of paper, and we definitely don't want to be dealing with that, So yeah, it was just trying to get things organized and sent to us properly.
I work with help a lot of people with sub-2 deals, and first thing I do when I get one is go on title, and the one thing that repeats over and over again is there's another lien, and it's the result usually of a loan mod. And the seller said nothing about it. And it's not because they're trying to be deceptive. It's because it doesn't register.
They didn't think about it. Yeah.
Right. It just doesn't register. Yeah, we did do something with the bank back 2 years ago.
Right.
Yeah, it's not malicious. It's just, so sellers,
to remember.
but they're not purposely deceptive.
No.
They're
just normal people.
Awesome. I am so happy that you would come and share this journey with us. I think a lot of people will benefit from this.
Yeah.
Beth or Brett, do you have any final questions for Brenda here?
No, I think that's awesome. Congratulations. Well done, and good luck on the next ventures.
Yeah. We've got 2 more we're looking at, so we'll see.
That's about Brenda.
That's amazing. You should be really proud of yourself creating a fund.
Yeah, I'm really excited. Yeah,
and I expect
I've got really great teammates.
I expect a hug at Squad Up.
Of course, a hug and a picture.
I'm going there for hugs. All the hug party.
Mm,
Absolutely. There's too many people I haven't seen in a while.
I
or-
know,
Or
exactly.
ever.
Yeah.
You know, that I spend a lot of time with on Zoom meetings.
Yep.
So I'm really looking forward to that.
Yeah,
Uh,
that's what changed everything for me is like I started sub to early 2023, went to community camp, and everyone that I was talking to on Zoom became like a real true friend because I like got to touch them and hug them and shake their
That's
hand
funny.
in person. And now it's like we're always talking and chatting all the time. Like it's really cool. It's you get all these new friends, some become family, and you know, the whole like surround yourself with people with the same mindset, like it really
Yes.
does make a difference, you know.
I look around
Wouldn't
my
have got
life.
this.
I look around my life now. I'm like, did I know anybody before?
Right. Totally. Totally. Yeah. Like I love my best girlfriends, but I kind of spend most of my time with my real estate friends. You know?
Well, hopefully I'll meet you guys soon.
Yeah. Maybe you can come to the meetup. Like I said, March 18th.
Anyway, again, Brenda, thank you so much.
Yes, thank you so much. I'm going to reach out to you.
I'm
Yes,
going to
please.
claim that
Yeah, reach
hug
out
as soon as I get there. And